Okay, good evening, everyone. Good evening from Nigeria. If you're joining from Nigeria, good evening. So excited, super excited to be with us on the call tonight. So, okay, we are getting started in a while, in a short while. So, just get them to see how many more people we can get on the call right now. So let's get ready to go, guys. Let's get ready to go. Let's get ready to go. Let's get ready to go. Let's go. Awesome. Okay, so today, guys, we are going to be moving on to module 4. Today we are starting with module 4, and this is the part where we be getting a little bit technical, you know, with our uh, lessons. So we're getting to the really practical part of this training program. And like I told us, this is the point where you are getting ready to be a trader. This is the point where you will start to do a lot of practicing. You start to do a lot of practicing. You have to do a lot of, um, your journey, so to say, technically, to being a trader starts here. Okay, so let's see what we have for today. Like I said, in module 4, we will be looking at market structure. Okay, and looking at market structure, we will be focusing on the three key um, aspect of market structure. We look at trend, we look at support and resistance, and we talk about zones. Okay, so we're going to start with the first one in today's class. Um, so as it is, awesome, Mr. Ayola. Good evening. Good to have you on the call. Good to have you on the call. So we're going to start with the very first one, aspect of market structure. Now, what is market structure? Don't forget, guys, to put your name in the comment box. Let me know who is in class today. Let me know who is in class today. From next month, we'll be doing a lot of you know technical analysis. But this is the beginning. This is gonna be the basics, the bedrock of you know everything everything we'll be doing as far as technical analysis is concerned. Welcome, Mr. Bello. Welcome. Okay. So sorry. So it's important that we make sure that we are committed to class from this point going forward. So, and also let me find out, let me ask you, how many of have you have a trading account? You've ever opened a trading account? Let me know. Put it in the comment box if you have ever opened a trading account before. Comment box. Okay, great. So mm, oh, So I'm just making adjustment to my modem position to see. Okay, let me just know if my internet, if you can hear me. Okay, I think it's better now. Market mean as far as trading, my network is pretty unstable here. But please, if you can hear me and I'm just let me box. Okay, hold on, please. Okay. Um, I think we're good to go. I'm back. Forgive me. It's really about where I am right now. The condition of the network where I am. Some monitoring at my end and see um okay, you can hear me now. Great. So let's get started. Okay. So the when you talk about market structure, it highlights the different levels in the market. Now, if you have been joining the classes we have had from module one up to this point, you realize that we've been emphasizing price and value. Um, okay, I think this should be better now. I think this should be better now, guys. So as I was saying, um, so part of there are different ways in which we look at the levels in the market. There are different ways in which we look at the levels in the market. This light is really, I'm not having good lightning, but hopefully we can manage this. Okay, we can manage this. So this it is these conditions and these behaviors of prices as it you know that we are going to be studying on the market structure in this module. In this module, we're going to be studying the behavior of prices over a period of time in the past. We studied the behavior of price over a period of time in the past. So we use this historical data to predict what's going to happen in the future. We use the historical data to predict what is going to happen in the future. That's what market structure is all about. So we're going to be looking at three major aspects of market structure, or studying the market structure. We're going to be looking at what we call support and resistance levels, and we're going to be looking at trend, okay, trend directions, and then we're going to be looking at zones, okay. Those are the three major structures within the market that we're going to be looking at. We're going to be using these three um, aspect of structures, to make trading decision. Where should I buy? So, like I told you, the foundational principle, the basic principle of trading is buy high as buy low, sorry, buy low, sell high. That's the primary principle of trading. Buy low, sell high. Buy market structure analysis does for us is that each of these three aspects of market structures help us to identify the low levels and the high levels of the market. So when you know how to use them, you'll be able to determine what constitutes a low level of the market that we inform your buying position or your buying transaction, and or help you identify the high level so that you can make your sell. Yeah, you can take a sell position in the market. So I won't be using slide today. I'll just go straight so that we can go to the chart and then you can see what we are talking about. So this this year we have this gold. Okay, let's look at let's let's look at Euro USD. Let's work with Euro USD. So this is Euro USD. Okay. Okay, guys. Okay. So this is Euro USD, and let me go to a monthly time frame. Euro USD monthly time frame. So of course, by now we have talked about time frame, so it's not new to you. You know what time frame is, right? We all know what time frame is. So now, and of course, we all know what candlesticks are because we have discussed that. We know what candlesticks are, and we know how this candlestick um, the, tells us the story of what's happening in the market, whether the market is selling or whether it's buying. So if you remember, we said the opening and the closing position tells you, defines whether a candle is a buy candle or a sell candle, or is a bullish candle or bearish candle. Okay. And then if you remember, I told you if you have series of bullish candle, you will see that the trajectory of price will be upward. And if you look at, if you see a bearish candle, if you see a bearish candle, I did tell you that if you see a bearish candle following each other, you see price going down. You see price going down. Okay. So those background, that background is very important. That background is very important. Now, so what we do to predict what is going to happen to price or to a particular currency in the future is for us to look at what has happened to it in the past. Why? Is the strength of technical analysis in trading is built on the belief or on this statement, this assertion that history repeats itself. What happened in the past, you know, will happen in the future. Now, but it's really not as simple as that. The premise for that assertion is in the laws of demand and supply. When what laws of the demand and supply and psychological of traders or of investors in the market. Now they have levels which influence their behaviors. They have levels in the market, price levels. When I say level, I mean price levels. There are price levels in the market that makes some trader or some investors to make certain decisions. Okay, so let me give you an example. There was a time that Naira was 316 Naira and 360 Naira to $1. And it was there for a long time at that level. Now, today, Naira is like 900 and something dollars, in the black market. So let's say, for whatever interesting reason, the price of dollar, the value of dollar begins to fall, and it begins to fall. If you will realize that when price, if it falls up to 360 naira per dollar, there will be a reaction in the market. Why? Because 360 is a key level for naira dollar transaction, because for a long time what do you call it? For a long time, what do you call it? That value, that price level was sustained for a long time. For a long time, the price level was sustained. So for a long time, we realized that dollar was 360 naira for a long time. 360 naira for a long time. So it went up to 9 something. So by the time it gets to 360, we may see a reaction. We may see traders really wanting price to shoot up from 360 back. Okay. For whatever technical, fundamental, or sentimental basis. But this 360 can form a psychological level for traders. So at 360, we may see price wanting to go up if dollar falls from 900 to that it is. It's 900 plus right now. So if it falls from 900 plus and falls to 360, when it gets 360, we may see the traders may want to push price up from this 360 naira level. So this 360 naira is called a support. So we're going to talk about support and resistance. So this 360 naira is called a support. Okay. Okay, so the first thing we want to talk about in market structure, like I said earlier, is what you call support and resistance. Let me put it out here. Support okay. They're talking about support. So what is a support? A support is the floor of the market, is the floor of of a price of the price of a currency pair. Okay, so where price mostly reverses upwardly. Okay. So this is what a support is. A support is the floor of the price of a currency pair where price mostly reverses upwardly. So what it means this is what it means. Okay. Market is dropping. Market is dropping. Market is dropping. Price is dropping. Okay. And then it does something like this. This level here is a support. Okay. This level here is a support. Why is it a support? Because that is a level, a price level, which we call floor. A price level which we call a floor. That's the price level where price bounced back up. Okay, that's a support. So you may call it it's a low price which we call low price level reverses upwardly. Now, the opposite one is called the resistance. What price is, then also you see price bounces back or reverses back downward. So a place here is because price hits a level and it was resisted and it begins to come down. The price begins to come down. So this is a resistance. So what, by definition, a resistance can be a price or, okay, the ceiling of the price of a currency is downwardly. Okay, let me put that. Let me put that. Let me put that in a minute. So a resistance is the ceiling, if you like, call it roof of the price of a currency where price mostly reverses, okay, downward. Okay, so these are the definitions for a support. A support is the floor of the price described to you here. Okay, just like I described to you here, that price level where price begins to fall. So the characteristics of a support is this. Look at it. Also called the floor, is that price before the support level must have been falling, and then once it gets to a floor or a support, it's going to bounce, it's going to reverse and go upward. Okay, so price before that time must have been coming down, and then when it gets to the support, price begins to go up. That's the support. A resistance, price before the resistance must have been going, price before the resistance must have been going upward, and then it gets to the resistance or the ceiling or what we call the roof, and then it's going to bounce and reverse and it's going to start coming down. So having explained it that way, now let me get your response. Do you understand the concept of support and resistance as I described it? Do you understand it? If you understand it, I understand it, put in a yes. If you understand it just the way I mean, as I'm describing it, put in a yes. Put in a yes if you understand it the way I'm discussing it. Okay, good. Now, so what trading decision do we make at this structural level of the market? Write this one down. When price gets to a support, you buy. When price gets to a support, you buy. When price gets to a resistance, you sell. Type it in the chat box. This statement I just made. When price gets to a support, buy. When price gets to a resistance cell, or you put it in the chat box. I want to know you're getting this. Put it in the chat box. Put it in the chat box. When price gets to a support cell, when price gets to a support buy, when price gets to a resistance sell. Type it in the chat box. Let's go. Mr. Lukayo, there you put it in the chat box. Mr. Bill, put it in the chat box. Eileen Rema, put it in the chat box. Put it in the chat box. I want to see it. When price gets to, and I'm asking you to put it in the chat box because I want you to mind. I want that in your mind. I want you engage your mind so that thing can be imprinted in your mind. That's the beginning of your success in trading. Price gets to a support buy. Price gets to a resistance sell. Put it in the chart box, ladies and gentlemen. Yeah. Let other people put it in the chat box. Put it in the chat box. When price gets to the support buy, when price gets to the resistance sell. Absolutely. Good one, Inirema. Good one. When price gets to a support buy, yes. When it gets to a resistance sell. I'm consciously repeating it because I want it to enter into your mind. This is what's going to help me to be successful. That's what trading is all about. Understanding this is your secret to making. Let's look at it practically. Let's look at this period. December 1999, which is September. So we are looking at these two periods. December, we are looking at what happened to USD between December 2023. So within period. Now, let's start. Follow me, okay? Now, this is where the story started in December. Price went down, right? And then it went all the way up to 2024. And in 2024, it dropped again. And then it went up again up to 2008. And then it dropped again up to November 2028, went up again within that period up to November 2029, came down again up to June 2010, went up again up to May 2011, then came down again from May 2011 to August 2012, came down, went up from August 2012 to April 2014. Then from April 2014, it came down up to December 2017. And from that December 2017, it went up to February 2018, and then came down from February 2018 to April 2020. And from April 2020, it went up to February 2021. And from February 2021, it came down up to October 2022 last year. And up. Okay, up to July 2023. And let's stop there. Let me remove the time markers. Okay. Can you see what I'm seeing, ladies and gentlemen? Can you see what I'm seeing? So let's now look. Let me pick our support and resistance line, and let's mark. Let's pick this horizontal. Now, the journey started from this chart in December 1999, and price this level. Now, I want you to pay attention. The price level, don't forget, on this chart, the prices are on my right. Prices are on my right. Okay. So I hope you can see my line. Let me just make it tick a bit so that you can see them very well. So price falling. So this is like our resistance. Roof. The roof price was resistance. What happens to resistance? Price fall from the resistance, right? If you remember what I said. So at the resistance price is going up, and then okay. One thing that is also clear is when price in 2000, when price got to when euro got to 0.82 cent, it bounced up. So this means that this is support, because we can see price bounced up from that place. Boom, it came here, it bounced up. So that's a support. Let's look at the next place where price bounced. So price was going up in 2004. Price bounced, hit a resistance again, and bounced down. That's $1.3, and it bounced down and came. Then the next thing we saw is that in 2025 August, price bounced up again from $1.15. And then when it bounced, it went all the way up to $1.6. And then it became a resistance again. So before I draw too many lines, let's this helps us to identify price level. So from where we are starting this journey from, if you don't mind, this is a practical class. You can write some of these things in your notes, your journal notes. Okay. So the first price level here is 103. That's our first resistance. 1.03. So this is what I want you to do. Right? This is what I want you to do for me. So you're going to be writing more like a table, maybe something like a table. Let me see how I can describe it. So we're going to have, as I'm mentioning the price level, you are going to write the price levels, okay? So when I'm mentioning it, 0.03. Please. Resistance, support. in your own book. So it's going to look like something like this. Okay, so if let's say I now say 1, I say 0.88. So whatever we call this one, you're gonna, so this one is support, is resistance, you mark it. No. Don't let us do it this way. Let's do it this way. Just have support and resistance, have support. So as I'm calling it, you put in those. So the first one I call 1.03, 1.03, it under resistance. If the next one I call is a support, you put it 0.8. If the next one I call is a resistance, Abi, you put the price again 1. So as I'm putting them in the structure that they react to, or that they belong, that put it like that. When we finish, I'll now show you. We'll now look at you look at your table so that you will use it to understand this support and resistance and how it works. So yeah, so the one is the resistance, and is 1.03 resistance. Okay, then now price fell to 0.82. 0.82, that's a support. 0.82 is a support. Now price picked up from 0.82 and went all the way to 1.36. 1.36, that's a resistance. 1.36 is a resistance, okay? And then it came down to a support level. And what this, let's look at this support price, 1.15. 1.15. Don't forget, I'm just mentioning, I'm not quoting the entire price. I'm just quoting the 2 decimal place, okay? So you understand. 1.15, okay? Then the next time the price went, so the 1.15 is a what? Now, yeah, let's see where I understand. 1.15 support, is it a support or resistance? Put it in the chat box. 1.15, is it a support or a resistance? Based on what you have drawn. 1.15, is it support or is it resistance? Sure, I'm waiting for your answers. $1.15. Price came down to 1.15. So is 1.15 going to be support for us, or is going to be resistance? Let's put it in the chat box. I'm waiting. I'm waiting. $1.15 support resistance. Okay. You guys, I'm not getting your feedback. Because it came down. So And we go to this level. It's nine.